Okay, thank you guys for your time. We really appreciate this. Thank you for joining us today. My name is Ivy Baca, and I'm the Vice President of Sales with Universal Commercial Capital. And I will be discussing smart real estate financing with Eric. Eric is traveling right now, but he will definitely join us. He's right here, right now. Eric, you there?
Yeah, hi. Yeah, I'm right here. Hi, Ivy. Hello, everyone.
Okay. Well, this is great. We will discuss today about commercial bridge loans. Okay, let's go ahead and
Okay.
begin. Yes. So we're going to discuss about smart real estate financing commercial bridge loan. Now, just please keep in mind, guys, that this is only for investment property. And we actually had this program available with us for quite some time now. And we do take in purchases, refinance, and cash out. And these are considered for all type properties, special use. It could be residential, multi-families. It could be commercials, any type of commercial properties, retails, restaurants, industrial as well, warehouses. We take in consideration all of those. Okay. The only ones that we don't look at will be construction or land loans. Now, just a little bit of highlights of this product. We can definitely go up to 75% LTV. Okay. This program is available nationwide. And the loan amounts for these, the minimum is 1 million. We're able to make exceptions when it's very close to 1 million, let's say 850,000 or 900 and plus. And it goes up to 17 million. Okay. The loan terms for this program, it could go up to 5 years. It is only interest, it's only interest only. And the rates, which is very, very good, starts at 6.5%. The prepay is negotiable. Sometimes we're able to do prepays from 6 months to a year. It really depends on each scenario. So we are open to discussion and negotiation. Okay. Now, we are only looking for first mortgages positions. They have to be definitely cash flowing real estate for all types of properties, as discussed previously. And I want to leave to Eric just a little bit of which loans are we targeting right now for this product. Eric, you want to tell us?
Oh, okay. Right now we are targeting like you mentioned cash flow properties only. Let me add something else. If it's non-cash flow, we can still do the loan. If there is enough room for us to keep like either 6 months or 12 months upfront interest. Since I mentioned cash flow or non-cash flow property, right now we do a lot of like multi-family, newly construction, just finished construction loan. In a sense, the project just finished, waiting to be filled up with tenants, so there is no cash flow yet, and the construction loan need to be paid up. We come in, provide a bridge loan, pay up the construction loan, while the owner waiting for the property to be filled up with tenant and refinance into a regular conventional loan. That's one thing. Another thing we are targeting right now is office spaces and retail. As you know, with like this COVID pandemic, this year there is a lot of like non-paying tenant. The cash flow is up, it's not there. The vacancy rate is up, and we come in and provide a bridge loan so the landlord, the owner can stabilize the property within 6 months or a year before they can refinance into the regular loan. That's what we are targeting right now. Trouble time, vacancy is up, cash flow is down. Sometimes no cash flow, a lot of like newly finished project. Suddenly the bank stop lending, so they cannot get a permanent loan to pay off the construction loan. We come in and provide them with a bridge loan for a year or 2 years before things get better. Okay, back to you, Ivy. Yeah, Ivy, back to you.
I'm sorry, I had me on mute for a little bit. Yes, so yes, I agree with Eric. This product is basically for people that are trying to close in a very fast period of time where they have no time at all. Um, Now we are taking, as it says here, bankruptcies, correct, Eric?
Uh-huh.
Or discounted notes payoff, or maybe they had story loans, which those that had previous background and they can't get it through a bank. So
Right.
problematic loans, I would say.
Yeah, I would say like anything out of the normal range that would make the regular bank lender to say no to the loan. Bankruptcy, recently we do it. Notice of foreclosure, discounted payoff, uh, partner buyout, those circumstances, I don't think the regular lender or bank would touch it. Then we come in as a bridge
Mm-hmm.
lender until the situation improve, change, or the bank lender change its underwriting guideline itself.
Mm-hmm. Exactly. Now we also for this product, which is really good, is for people that are credit. They have problems as well. Limits environmental issues. There's light value add-on transitional, non-stabilized properties. People that are trying to purchase or maybe refinance their current mortgage. Um, and basically, like Eric said, trying to get this one really close fast with no problems and no excuses to get your deal funded. Okay.
Right. I want to add, like on the non-stabilized property, we do a lot
Mm-hmm.
of loans these days, like when supposedly the owner has 20 unit apartment and he want to renovate 5 apartment first or 10 apartment first and raise the rental price later on. So it's unstabilized in a sense, half filled and half vacant. The cash flow is not there. That's when we come in. We have a lot of like loan requests right now, like the owner come in an old apartment complex and they gradually renovate the property along the way. And when they do so, there will be like 30% vacancy, 40% vacancy, with the expectation that the total revenue, the total rental income will be increased once the renovation is finished. That's very common these days, especially for states in the South, like Georgia, North, South Carolina, Texas. Okay, back to you,
Mm-hmm.
Alfie.
Yes. Now, for initial documents required, which I want to get to this, but before we do, now, what do you think it's the most important thing besides cash flow? What actually do we take in consideration? Are there tax returns, or when it's a cash flowing property, of course, an investment property? Do we look at those tax returns to see their back history, Eric?
No, actually, in our program, we don't need both business and personal tax return. First thing first, we need to look at the location because we tend to stay away from rural property. Rural, I mean in the city, town, or county with less than 20,000 in population. So first thing first, we're going to establish where the property is, and then we move to the cash flow of the property. Like I say, if the cash flow is not there and there is enough equity in the property, we will build in an upfront interest reserve so we can get away from the cash flow problem. But location is important too. And I realized a lot of property in the south, it is a rural or semi-rural area.
Mm-hmm.
And if the population is less than 20,000 or it's like 50 miles away from the major metropolitan area, we tend to stay away from it. So keep that in
Yes.
mind. Okay, back to you.
Mm-hmm. Yes. So
Oh,
for
another
initial,
thing I want to add is another thing I want to add
go
is
ahead.
in some like office complex or retail shopping center, these are the things that per, per our guidelines we cannot touch. If there is an office complex and there is a tenant that in the cannabis related business, then we cannot touch that building. Or in the retail shopping center, if there is a tenant that occupy more than 30% of the gross square footage and they are in like some kind of like adult entertainment business, then we also cannot touch those properties. Okay, back to
Yes.
you. Mm-hmm.
Yes, for initial documents required on this type of loan program, it helps us a lot to have a loan summary. Give us a little more of the story of the loan. You know, what is the loan amount? Why is the borrower trying to go to this loan program? If it's time sensitive, if it's trying to buy out a partner, um, there's different scenarios, but we like to know why.
Right.
Um,
The main thing is in one short sentence. Why
mhm,
bridge loan? We want to know why right away. Oh, I had a
mhm,
bankruptcy 2 years ago. Oh, the vacancy rate is high. That is the first thing in the loan scenario we want to see. Why bridge loan? For all kind of reason. Then we can establish and zoom in the potential problem right away, and we can analyze that problem immediately. Mhm.
exactly. Now, we also take a look at personal financial statements. We like to see how strong the borrower is financially, and we also like to see operating statement. If the property is right now currently leased out, we like to see those lease agreements. The term on the lease agreements, are they important, Eric?
Yes, the term on the lease agreement normally with like the lease gonna be up or finished within a year. We consider that is a vacant unit. So the lease term is important too. Or the tenant just moved in 2 months ago. We take a deeper look at those leases, and that's how people go to a bridge loan lender because for conventional lender or bank, the lease need to be 2 year seasoning before they count it as an operating revenue. So a lot of time, just finished renovation, the lease only 6 months or a year old. A lot of time, especially these days, the bank like Wells Fargo and BFA, they would say no on the loan
Mhm.
request.
Yes. Yes.
And let me talk a little bit of personal financial statement.
Okay.
We want to look at the personal financial statement to make sure the borrower is not drowning. Like nothing left in the bank account. And if they are drowning, why? So we can determine how this new loan can help them. But like ideally on the personal financial statement, if there is like some liquid cash, then we would like to proceed further. If it's nothing pretty thin personal financial statement, we want to know why and how our loan can help turn around the situation. Back to you, Ivy. Hello, Ivy.
I'm so sorry. It's my mute and my microphone that keeps me muted. Yes. So besides that, if it's a purchase, we like to see the purchase contract just to verify the purchase price and the terms on that contract. Um, Also, if there is any appraisal in hand, it does help us see the value of the property. Even if it's a year old appraisal, it's definitely helps us. Okay.
Mhm.
Now, we do provide approvals or pre-approvals within 48 hours, as long as we have the all the information needed in order to size up your deals. But it does take us about, I would say, less than 48 hours. Okay. So if you have a scenario and you're ready to discuss, go ahead and email us or
Mhm.
call us. We're ready to give you a soft quote.
Mhm.
Okay.
Yeah, I can
Um,
review the any loan scenario right away. I can look at the proposal and I can tell where is a plus, where the minus, where is a positive, where is a negative.
exactly. Now, I would like to just take a minute to see if there's any questions here. Let me see. Um, yeah, I'm so sorry about the bad connection. I don't know what exactly happened, but we're going to have this video available for sure. We're going to have it available on our YouTube channel. We're going to have it available to send to everyone who attended today to the webinar. We're going to be sending it out. Um, Now, I also see I have a question here. It says something about uh, credit. What exactly do we look at if the credit score is below 500? Hello, Eric.
Yeah, hi. What is the question again? Sorry, I was
What are we? No, that's okay. What are we
yeah.
looking for when the credit score is lower than 500?
Normally, if the FICO score is under 500, there is some major issues, and we want to know why first. But slim chance for any FICO under 500 because from our experiences, it is some major issues very recent. And unless we have a very good explanation, it won't fly.
Exactly. Now, will a loan summary form 1003 will do?
Yes, yes, the loan summary and the penalty, if we have a credit report, it would help, but that's enough for the initial review.
Okay. Do you need a personal financial statement at the beginning of the submission?
We don't, but we might restructure the loan later on if we have a personal financial statement and it show a very weak financial position. Like I said before, we're gonna come back and ask for the explanation. We're gonna see, whether our loan would help the situation. So,
Mm,
no, we don't need it in the beginning, but we might change, our underwriting review once we have the personal financial statement in hand. If it's too weak, possible a problem.
Okay. Another one is saying, another one that we have here. Let's see. Okay. What exactly do you look at on the operating statement? Let's just say that there is there's a 50% vacancy on the property, on a rental property, residential.
Okay, so if it's 50% vacancy, likely on the DCSR, the debt service coverage ratio, it will be under what we prefer to see. But since we are a bridge lender, in order to get away from a less than expected DCSR, if there's enough equity, we will build in a 6 months or a year upfront interest. And if we have those interest upfront, we don't really care much about the monthly cash flow to service the loan.
Okay. Okay. Is this a full doc program?
Um, if if you think it's not a full up program because we don't need a business over personal tax return. We might ask for it, to take a look and get more information, but we don't base our underwriting decision on the number on the tax return. So you can say it's more or less a, a debt coverage ratio program.
Exactly.
Yeah,
Yes, yes, everyone. This is not a full doc program. This is not a light doc program. This is basically a stated income where
mm,
we really don't require none of that, nor tax returns or W-2s or personal or business.
yeah.
Now, as far as the leverage, they're saying what determines the leverage on this type of loans?
The operating income. If the property is vacant, we're gonna do a projected operating income. That means future income to see whether it's enough to service the loan. The bottom line is your income has to be enough to service the loan, and that will determine leverage ratio. It could be maximum 75%, or it could be less, only 70 or 65%, depend on the actual or the projected income in the future.
Okay, we have another question. Where can we do bridge loan for a single family home with 100% equity, 50% LTV?
Yes, we do, but keep in mind our minimum loan amount is 1 million. So if it meet our minimum loan amount requirement, we do it all day long.
Yeah, I would say for anything lower than 1 million, we obviously have another product in UCC. We could do it under hard money, correct?
Right. Uh-huh.
Okay. Now it says reserves needed. I think Eric already discussed about this, but let's just go ahead and mention it again. Eric, when are reserves needed?
Well, when is what? Ivy?
Reserves, when are they needed?
Reserve? Yeah,
Uh-huh.
actually, there is no fixed rule about reserve. You know, it's not like 6 month reserve, 12-month reserve. Because if there is not enough cash flow in the property, we want to keep 6 months or 12 months upfront interest. So we don't really care much about the reserve. If the borrower had the reserve, would make the loan stronger for sure. But without reserve, will it kill the loan? No, no. But
Mm-hmm.
we would look deeper into the issue. But it will not kill the loan. There is no fixed number like 3 months, 6 months, or 12 months reserve.
Yeah, in the best case scenario, we will definitely don't need it.
Right.
Um,
Uh-huh.
okay. I think that's all the questions right now. I really do appreciate everyone for joining us today. I am going to put our contact information now so that everyone can contact us. Again, this is Ivy Baca. I'm Vice President of Sales for UCC, and Eric Tran, our CEO. There you have our emails and our phone numbers. These are direct numbers whenever you want to contact us for any loan scenarios you have. You're welcome to email us or give us a call. We're always available, Eric or I.
Okay, thank you everyone for joining this webinar. Feel free to send over all loans and radio for us to review or call me. I will be able to take a look at the loan scenario and get back to you within 24 hours on yes, no, maybe, what do we see, what do we think. So call us, email us, and once again, thank you for joining the webinar.
Thank you so much, Eric, and enjoy your trip. I'm so sorry. I know
Yes.
you're traveling right now. And thank you, everyone, for joining us in this webinar. We really look forward to the next one. We're going to be having a lot more of our loan programs discussion in the future. And thank you. Thank you again. You guys have a great day.